Thank you for joining for today's Income Tax 2023 and NRI Taxation session conducted by our guest is Prabhakar Reddy and Certified Public Accountant, Prabhakar Reddy Garu. Before Prabhakar Reddy Garu, talk about this taxation, I would like to introduce the GATES 2023 team. Along with me, Srini Parsa as the chairman also joined with us, and the co-chairs also joined with me, and also Josna Palakurti also is there. This is the executive committee and vice president Sandeep Reddy Gunla and secretary Naveen Bathani. Ramana Gandra is the treasurer, and Kirti Dargaud Chakila is the cultural secretary. Ganesh Kasam is the media secretary, and Chalapati Venamaneni is the event secretary, and we have Raghuveer Reddy, sports secretary. Naveen Vujini is technology secretary. Sunil Goturu was the past president, and Prabhakar Madhupati it was the past chairman. And we have a board of directors, Prabhakar Madhupati and Ramacharya Kirti and Josna Palakurti, Ramakrishna Gandra and Geeta Naranagari. This is a very dedicated and committed team working for the GATES 2023, and also almost closer to 2 decades. The GATES has been providing great services in Metro Atlanta and also in back home in Telangana. And these are the programs conducted by the GATES: health, taxation, organic farming and step challenge, and also sports and nutrition. Health session, will trust and estate planning, blood drive, life insurance, yoga, and also taxation and adopted a road. Food drive, and serving breakfast to police department. Kids talent show, serving breakfast to fire department. Youth enrichment activities, acknowledge or recognizing American festival through flyers or any small gatherings. And also we initiated books distribution to elementary schools and libraries, and also sessions on college essay writing, process of getting admissions in Ivy League colleges, scholarship to merit students in India, providing infrastructure to public schools, and also major cultural events. We have Telangana Cultural Day and Vanabhojanal and Batkama. And these are a few glimpses. These are the earlier previously we have done some activities. Those are some of the images. And also a lot of programs are lined up in every month. Right now, taxation session is going on in February 11th, and also 25th, like we have a getting admission in Ivy League schools. Pretty much we have a most webinars at the same time in on-site programs. Talent show is coming up on March 11th, and Telangana Cultural Day on June 10th, and we have Vanabhojanal on August 19th, and Batkama is on October 22nd. And along with that, we have all the virtual programs till December. And also, please keep in touch with GATES and please keep supporting us. We have a Facebook page, facebook.com and GATES USA, and also we have a website, gatesusa.org, and also we have a YouTube channel, and also we have and also membership. Please, if you have not taken a membership, please take a GATES membership. A lot of advantages with the GATES membership. We are coming with a lot of initiatives for the members. So if you're not a member, please take the GATES membership. And thank you, Srikant. Please go ahead and introduce our guest, Prabhakar Reddy Garu.
Thank you, Janardhan. Thank you. So, with no further delay, let me share my screen, and hope everyone can see my screen.
Yeah.
So, to introduce this guest speaker today, Prabhakar Reddy Garu needs no introduction. He's a very well-known tax consultant in Atlanta area. He is known as Reddy CPA for a long time. He's a very humble, smiling face always. Whenever he calls, it's always a smiling face. So very nice to talk to and nice to be able to reach. He's expert in all kinds of tax, even in India and here, talking about LLCs, S corps, C corps. Any questions you have, it's your time to take advantage of his time and ask any questions you have. Please don't stop him in the talk process. If you can put it in the chat, we can talk about the questions at the end. With no further delay, Prabhakar Reddy Garu, please take over. Ready? Ready? I think he's stuck. The screen is stuck.
Looks like it's frozen there.
Yeah.
No, I think it's frozen.
Radigar, we can't hear you if you're talking.
He's having that
Hear
problem
me?
before. Also.
Yeah, yes.
Now we can hear
Yeah.
you.
Let me log in from my.
Yeah. I think he's going to come through other.
Yeah, he got dropped. He's going to come back. 1 second. So whenever you guys have any questions on the team on the call, just put it in the chat to everyone, and we will read about the questions at the end. That way, we are not stopping the flow of the presentation. Prabhakar Garu?
No, you're on mute, sir.
I think he's joining in now.
Prabhakar Garu, you're on mute. only.
Just joined, but you're on mute.
He's got stuck again.
Sorry, guys, for the technical issues.
Can you guys hear me?
Yes, sir.
Yes, sir.
So somehow, I mean, I don't know, my laptop has just been acting up. I think I'm trying to dial from my cell phone. I hope it's
Sure.
okay.
Yeah.
I don't think the people need to see my face when I really talk. So the face is as well as not as prettier as you portrayed in my picture.
I think the laptop one you need to be keep it in mute, sir, or you can close it.
Yeah.
So now you guys can hear me, right?
Yeah.
Yeah.
Can hear you, but it's a little echoing, sir. So can you please?
So I
Yeah.
left the meeting there.
Yeah, now it is.
Okay. Super.
Super.
Okay, so I'm first of all, I'm sorry. I don't know why my office internet, which is really acting up. So as I said, the people don't have to see my face.
No, you can also put the video, sir. Video option, you can also turn it on.
So what I'm saying is the face is last prettier in the slide than my actual face right now. So it's okay if people can hear me. I can really on also. Okay.
Yeah. Perfect.
Okay. So thanks for the nice words. I know Janardhan for so long. I mean, it's the GATES, that is what we really found some time back, not some time, a couple of 15, 16 years back. I call myself as one of the proud member who really started it, the GATES. So I'm always happy to be in the GATES, and to give whatever little knowledge what I have. So to go back to the income tax, we all know that, we are earning the income, we have to really file the taxes, we pay the taxes. But the ironic situation is a lot of people we really come from India. We do really have the financial connections and also, the connections within India and the banking connections. And somehow, in my experience in last the 10 years, I would say that we really don't really give a little interest in what we really do with respect to the Indian, the income or anything. So what I was really trying to do in last, some years to state that, as a citizen, as a green card holder, as a resident of the USA, it is not the US income which you have to really bother about. You need to really think about the other aspects of the income, which is the worldwide. So I am a CA originally. I'm a chartered accountant in Hyderabad. I practiced there for 6 years. That's why I know about the Indian taxation also. And then after coming here, then I became a CPA and started this practice under the name of the Ready CPA. Let's talk about what are the things which has been 2022 taxes, which we are really filing right now. And then I touch base upon what needs to be done with regards to the Indian taxation. And the other aspect is all this presentation and everything, which is really come to a stage where I get a lot of questions, I meet a lot of people. Based on that, just I prepare. If you have any questions, you always feel free to talk to the moderators or send me an email. I'll try to respond. Next slide, please. So we are into the 2022 tax filing, which we are really doing right now. What is being changed with regards to 2021 tax filing, which we have done in 2020 April time? Technically, a lot not been changed. Okay, the tax brackets little bit increased because of the inflation, and the standard deduction, which also has been increased a little bit. Itemized deductions remain the same. Your charitable deduction, which has been subject to either 30 or 50% of the net income, the capital gain rate remains the same. One of the primary aspect of the 2021 filing to 2022 tax filing is, if you really know about, I mean, we have received a lot of stimulus money in 2020, 2021, in January and 2020 also. So the reporting of that income, which was the mandatory in the taxes of 2021 filing, because the IRS wanted to really see whether you received the money or not. If you're not received the money, they wanted to give the money. That's why those two forms, what you really received, about the $1,400 or $600, whatever you call it as, that is no longer applicable. So that's one of the major change. And if you talk about any of the incentives which you were receiving in 2021 or 2020 tax filing, everything is gone. Whatever the COVID related, the aspect which the people got benefited, there is no further benefit with regards to that, other than the business which is our ERTC, which has been little bit is there. Otherwise, there is nothing in the 2022 tax filing, which is really going to be pretty plain, straight. If you have the W-2s, you have the rental income, you have the LLC income, and you have the partnership income, whatever you call it as, interest, dividend, those things which did not really change anything. So just you need to compute and you need to really pay the taxes. Next slide, please. And this is what needs to be done under the personal income tax structure. We all know about, we are all individuals in America. When we really earn the income, the April 15th typically is the last day, depending upon the Saturday, Sunday, and the Good Friday, whatever you call it as. They extend to 17th or 18th sometimes. First of all, you need to really get hold of all of the income tax documentation. Your AGI is very important. AGI is nothing but the adjusted gross income, which has been the compilation of your various the income tax rates. Typically, a person earns the income by way of, I would say, the salary, and second is the interest, third is the dividend, the fourth is the capital gains. The fifth is if you have S corporation or LLC, the income from there. So these things which needs to accumulate, and then you call it as the AGI. After you accumulating the AGI, there are certain adjustments which you can take. The adjustment which you call it as either by form of the itemized deductions or the adjustments which the IRS gives. Then you derive the taxable income, and then you apply the tax rate which has been applicable, and then whatever the taxes which is withheld from your W-2, that will be deducted, and then the rest of the money which you need to pay the taxes. Next slide, please. So when you really say about the individual income tax structure, you imagine yourself as the person who is really doing the taxation. You imagine yourself as an individual. Typically, how do you really derive your income? As I said, you are an employee or you are a self-employed individual, either on 1099, which you receive 1099 on your personal name, or you can receive a 1099 on your LLC if you're a single member. Or if you're having the membership interest under the LLC, either as an S corporation or the member, you receive a K1. So typically, the structure-wise, it cannot really go beyond this, And if you talk about the C corporation, you are not really bothered about it unless you receive, your dividend from there. But if you're S corporation, you've got to really finish your S corporation before filing of your taxes. If you are a LLC, which is not S corporation, or the multi-member LLC, where you file your 1065, you have to receive your K1. And under the individual, you have your W-2 income, your interest income, your all the incomes, and then you need to accumulate. Next slide, please. So the vehicle tax credit, these all are the things which I'm really getting a lot of questions nowadays, because the Tesla reduced $10,000 the price, and everybody is really so after 7,500 tax credit. What are you really going to get? So how to really get the credit? The first of all, if you have the vehicle already bought the vehicle during 2022, even if it is on December 31st, 2022, you're not eligible. That is the primary thing. But if you are buying from the 1st April, and if you are getting the vehicle during this period of the time, then you are eligible. So, of course, the eligibility is 7,500, but there is an income tax limitation. Sorry, the income limitation. You have to have the income, if you are married filing joint along with your spouse, your income cannot exceed more than $300,000. If you're filing the single, your income cannot exceed more than 150. But what the IRS says is, though you bought the vehicle in 2023, you are going to get the credit in 2023. You can really compare the income of 2023 and also 2022, and whichever is less, you can really take it. Perhaps, if you have an income in 2023, which has been more than $300,000, married filing joint, you can go back and check your 2022 taxes. If your income is less than, 300,000 or 150 as a single, you can really get that credit. One of the interesting aspect is, if you are buying the vehicle on the company name, you are not eligible to get this $7,500 credit, because as an individual, you have to really buy. As an individual, only the credit is being given. It is not for the companies. When you really buy it on the company's name, you will get the depreciation. That means you are using the vehicle for the company, then you can really get the depreciation. Next slide, please. So, if you really go into the taxation wise in 2022 in comparison to 2021, nothing has been changed other than these 5 or 6 aspects. With the plain tax return, you can really, some of the business wise, the depreciation, the bonus depreciation from 2022 to 2023 is being changed, but those all things which are not really applicable for an individual. But one of the important aspect I touch upon, because as to the USA taxation, I don't really see any of the issues, but the regular thing is the Indian taxation. You are an individual who came from the India, residing in the USA, either on H1B or on green card or on EAD or on the citizenship. So once you become the resident of the USA, what the tax law says in the USA is, you are subject to the global income tax. That means wherever you earn the income in the worldwide, that income has to be reported in the US taxation. That is the first and foremost thing which you need to really understand. If the income has been exempted in India, still that has been taxed here. That also you need to really always remember. For example, about the fact of the taxation, or what has been called as agricultural income is not being taxed in India. But is it not been exempted in the USA? The answer is no. You put the money into the NRI accounts, non-resident external accounts. The income is exempted in India, you don't have to file the taxes. Is the income has been exempted in the USA? The answer is no. So what I strongly suggest is, you go back and check the income relationship of what you have in India, then accordingly you need to really report it. Especially if you're on H1, it's okay a bit, because H1B itself is a dual resident intent visa. The enforcement which has not been that much, but if you are a green card holder or the citizen of the USA, just you have to really file the taxes for the income which you earn outside of India. Next slide, please. So what are there in the sense of the applicability? As I said, the citizens, green card holders, and the residents. The residents of the USA does not depending upon your USCIS status. Let me put it very specifically. Your resident of the USA status, as per the IRS is concerned, it is applicability as to the number of days you stay in USA. So that's what. Next slide, please. So assume that you got an income in India. What you have to do? It's just a very simple and the plain thing. If you're having the income, get a PAN. As you compile your income in the USA, you compile your income in India, tabulate it, and file your tax return for, 31st July, before 31st July. But what I suggest is, here a lot of people, they use the TurboTax, and they can really file everything which has been pretty much assumed to be automated, and you log in and you go to the TurboTax and you file. But I strongly suggest, if you have some kind of house property income, some kind of the income other than only the regular interest income, you engage a tax attorney in India, or tax person in India. Okay, just to follow up this, to do the lot of stuff which really takes care of it. Next slide, please. If you know the taxation structure in India, these are all things which you can really equate to US income also. Maybe the categorization, maybe the verbiage, maybe, the expression may be a little bit different, but the worldwide, the income, the aspect which is the same. If you have the business connection in India, what are the incomes you have? You have the rental income. Accordingly, you can also have the rental income here, and you will file, the Schedule E for the individual taxes. And you have the interest income. Here you call it the interest income, dividend income, other income. India, it is called as other sources income. And here you have the salary income called as the W2. In India, they call it as a Form 16A. So, and you have the capital gains, and the capital gains which has been the same. So technically, the income aspect, the income wise, it is one and the same. There is no difference at all. Of course, the taxation rates, the filing period, and everything is a bit different. That I can really understand. But the income taxes wise, there is no difference. Sorry, income wise, there is no difference. Next slide, please. It is an interest aspect. Okay, you are the resident of the USA, or the green card holder, or the citizen of the USA, and you assume that you sold the property in India. Just think of that situation, because nowadays I get a lot of questions, but how to repatriate the money from India, right? You invested the money in India, now you're selling the property in India. What needs to be done? What I'm saying is, you are subject to the taxation worldwide, right? That income, whatever the capital gain, once you are selling the property in India, you have to really pay the taxes in India. That is the straight. The same income which needs to be reported in the USA also. That is also another thing which you always have to really remember. So if you have to really report that income in USA, you have to pay the taxes in USA, right? So that is simple aspect. But the interesting thing is, the IRS has a double taxation avoidance agreement with India, in the sense of whatever the income taxes which you are really paying in India, while filing of the taxes in the USA, you can get the credit for that. Assuming a situation where on an income of the capital gain, you paid $20,000 in India, equivalent rupees, as the taxes. When it comes to USA, on the same capital gain, which has been charged at, say, the $21,000, you should be paying only $1,000 difference here. So that is very important aspect. So it is not double taxation. It is only the taxation of the difference. So if something which says that India, okay, the tax rate is only 5% on some of the categories. When in America, you say the categories taxation is say 20%, then you will pay the 20%. The difference of 15% you have to really pay. So that's always keep in your mind. The taxes, what you really paid in India, you will get the credit here. Next slide, please. Again, you have the income in India and you are filing the taxes in India. That needs to be reported in the USA. That's what I told you, right? I mean, it's very simple. So whenever you are filing the taxes in USA, make sure that whatever the tax return which you really filed in India, that you give to your tax preparer, so that that can be taken into account and the credit which can be given for your taxes. Another important aspect which the people do not really follow, in my experience, and in all these 10, 12, 13 years of the tax practice, what I'm really doing is the foreign banking account regulation. The statute of this particular law is very simple and plain. Let me tell you, it's very simple. What it says is, if you have a bank account outside of the USA, one account or more than one account, and you have a balance in one account or more than one account, in a combination of the accounts, more than $10,000. Okay? Just file the FBAR. It is only the filing. It is only reporting purpose. There is nothing as what you really say as the taxation purpose. So in other words, if you have a $50,000 in any bank account, along with your, the LIC policy, provident fund, whatever you say, the simple aspect is just you got to really file that particular return, but you don't pay the taxes on that. You pay the taxes on that income in your regular taxation. And one of the other aspect also, your tax return goes to the Department of Revenue. And this FBAR goes to Department of Treasury. That is very important, the aspect. There are two different departments, though we call it the IRS. One goes to the Department of Treasury, one goes to Department of Revenue. So for filing of 2022, at least, what you do is go back to your bank account, see that at any time it crosses more than $10,000. And then when I really say the $10,000, which includes your FDs also. Interesting aspect also, this tax return due date is 4/15/2023, but the FBAR filing is automatically extended till October. That means you have time to file October 15th. Next slide, please. And when I really say the financial interest, it is a bank account, provident fund, cash value, or anything. But another important aspect which you need to remember is, it is not only your financial interest, even if you have a signature authority. That means you opened up a account with somebody where you say that you're only signatory, you're not the owner. Still, you got to really report the bank account. Again, IRS is not asking you to pay the taxes on that particular income. It's saying that please declare that account, that you have that account. Maybe it is because they wanted to really check the money laundering, the cases of that. And the filing of the FBAR, it's pretty simple, pretty easy. It is not as cumbersome as the taxes. What I suggest is, there is something which has been called the BSA e-filing system. If you Google BSA e-filing FBAR, that is the first link which you will get it. What it will ask you is, it will ask you only the three things: your name, SSN, the address, your bank name, bank address, what is the maximum balance you have. You don't have to really engage anybody as a CPA. You can really do it on your own. But the interest which you are earning on those accounts, you need to really report on your 1040. But filing of the FBAR, you can do it on your own. That's what I strongly feel. Next slide, please. And but the interesting aspect of it is, I'm talking about only the foreign banking account regulation. But real estate is not a foreign banking account. So if you have a real estate interest, if you have anything else, you don't have to really do anything. Simply you keep the real estate. Interesting aspect is, if you have a real estate, the real estate income goes to your Indian taxation. It comes to American taxation, right? But the real estate income, if it goes to the bank account, if the bank account which exceeds more than $10,000, you need to declare. You're buying the real estate, sending the money to your Indian account, and then buying it, you need to declare that FBAR. But the real estate as is, you don't have to really declare. And if you have any personal assets, jewelry, cars, anything, they don't really qualify to be declared. It's only the foreign banks you need to really focus on it. Next one, please. This is one of the area where the IRS, which might enforce, as you know, that during the last year, the latest budget, whatever the income tax which has been approved by the Joe Biden, there are $88 billion which has been allocated to the IRS, or $100 billion. What it has been stated is, there are going to be the new tax agents, assumed to be almost like 100,000. Of course, they'll replace the existing ones, they replace the modernization system and everything. But one of the important aspect is, on a separate, the FBAR enforcement, there might be the people who can really review the bank accounts and see that who are not been really filed. If you are a non-willful filer, in the sense of, okay, you send a money to India to buy your real estate and you're not declared, technically it's said to be you're a non-willful filer, in the sense of you don't know you have to file, that's why you're not filed. But the thing is, you have the combination of the accounts, and where you have the lot of money which has been sitting in the bank account, you're earning a lot of interest in the bank account, and you're not really reporting that income in your 1040, then the law assumes that you're a willful person who are not really declaring your FBARs. That means you don't want the IRS to know about it. There, the penalty situation will be a little bit severe. It can be $100,000. And if you have a lot of bank accounts, it can be up to 50% of the account balance. Whether IRS has enforced this or Department of Treasury enforced this, I have not really seen that. But that might be coming in the future. We don't know that yet. Whether they have enforced on the people who have really done that earlier, there are cases they have done. What I'm saying is, as an automatic enforcement, which is they have done, it is not. But where they have enforced that on this particular, some of the people, the answer is yes. If the IRS finds that you are a willful person not filing the FBAR in order to not declare the income, then the criminal proceedings may also apply. So just be careful of that. If you have the bank accounts, it's pretty easy system. Just declare them, declare the interest, and file the FBAR. Next slide, please. But in majority of the situations, a lot of situations, if you are not really filed, what is that you can really do now? It's pretty simple. Go to the BSA FBAR system and file now, at least for last 3 years. The only thing which you need to really take care of it is, take care of that you declare the income tax also. That means you declare the income which you have earned of those deposits, those current accounts, those SB accounts, whatever you call it as. But if you are really filing now for the previous periods, IRS will not really ask you anything. But if the IRS asks you to file, they come to know that you got a lot of bank account, you not filed. And if they're asking you to file, then you are already under the civil examination of your bank accounts. So if IRS has not contacted you to file the bank accounts, then I suggest strongly to go ahead and file it. Next slide, please. Again, one of the important aspect of now I get a lot of questions on how to really get back the money from India. All I am saying is the money which has been accountable, the money which has not been accountable, I'm not talking about it. The reason is that in India, we all know that when we really put the money into the real estate, what has been recorded under the document and what you send is, there is a lot of variation. Likewise also, when you receive the money, there is a lot of variation. But the recorded money or accountable money, it's pretty easy. Say you send the money to your NRI account, that can be repatriated anytime. No questions asked. You send the money to NRI account, from NRI, you put the money into the NRO. And if you show the reason, then that can be converted back to the NRI again, and you can really send the money back. As you know, NRI accounts, only repatriation of the money can be done from NRE or NRO, but NRE which really maintain the account under the dollar terms. So if you go to the banker and say that, okay, I put the money into the NRO and convert that back to my NRE account, you won't do that. So there is a procedure. The procedure is whether you pay the taxes, where the money came from. That's what you got to really remember also. So if you really categorize the money, what the money which you're really talking about in India? So as I said in the first thing, the money which you receive as income. As the money which you really send from here, other than the income. And the third category is the money which has been given to you by other people. So next slide, please. So the money which you said to be received of the income. What are the incomes which you are really referring? Incomes you are referring, you got a rental income in India, you have a dividend income, or you sold the property in India, you sold your house in India. These all are your incomes. It's pretty simple. You have an income in India, you pay the taxes in India, and that can be repatriated. There is no questions asked. The only thing is, this is all money which will be there in your NRO account. You got to go to the banker and say that, okay, these all are the income which I really received, and these all are my tax returns which has been really paid. This is my CA certificate in India that I already paid the taxes on this. Then the ICICI, whichever the bank you're referring to, they will send the money directly to the USA. No questions asked. So the income aspect, whatever the income you have, you paid the taxes. You paid the taxes in India, you are paying the taxes in the USA. You get, double taxation avoidance agreement, and that can be repatriated. No questions asked. Next slide, please. And if it is not the income, what we are really referring, the incomes which is being really credited to NRO account, and the incomes which is being, or the money which you really send to India, so what it really says is, when you really sell the property also, up to the $1 million, you can really repatriate the money. So more than 1 million, then there are some conditions. So assume yourself as a situation wherein you are selling the property and having the income in India per year up to 1 million. If you pay the taxes, then simply that can be repatriated. That is 1 million is applicable to the residential property, but other residential property, there is some more limitation also. Next slide, please. And the other important aspect of it is, this is the interesting one. The income, the source, or the money receipt source, which is not income. The source of the receipt, not the income. That means you have not invested the money, you have not sent the money, you are not receiving the rental property, you are not selling the property, then how it can be done? For example, then you inherited the property in the sense of the property came to you from the father, mother, sister, brother, whosoever it is, you inherited. Then you did not really pay any of the money which to bought the property. And then, as I said earlier, amount earlier transferred from the overseas. You send the money from USA to India, and then you can really get it back. The third bullet point, which is really important, is the gift received from a relative. The relative is been defined under India as is your father, mother, grandfather, or grandmother, or your son, daughter, grandchildren. And the people who are at par with you means your brother, your sisters. So whenever you talk about the relative in India as to the income tax, assume it as a plus sign. The people above you, people below you, people at par with you. People above you, your father, mother, grandfather, people below you, son, daughters, and grandchildren, at par with you, your brothers. So if you receive any gift from them, either you are a US citizen or anything, nothing is taxed in the USA. Just remember that. You are receiving the money from a person who is not being a US resident. If you receive that money, there is nothing is to be taxed. If you receive the loan also from somebody else in India, that is also, loan is not anyway to be paid. If somebody is sending the money, $100,000 to you as a loan from India, if they can, with the RBI permission, that is not the income. So these sources, it can be done pretty easily. Next slide, please. What are the conditions for the repatriation? As I told you earlier, the money which has been lying under the NRO account, where you have to really pay the taxes on that, and then the maximum money which can be repatriated up to 1 million. It's very simple. You earn the income, capital gain, you put the money under the NRO account, you repatriate the money up to $1 million. No questions asked. Next slide, please. I get the question a lot, what needs to be done with regards to a relative which is really giving the money to me. What the Indian Revenue Service, IRS, there also they call it as IRS, Indian Revenue Service. Here it is Internal Revenue Service, there is the Indian Revenue Service. So what they say is, under the liberalized revenue scheme, up to 250K, if your father, mother, grandfather, grandmother, or your kids, or your sister, brother, they have the source, they can really send the money directly to you. But of course, if they are sending 250K, what the IRS in India says is, okay, deduct 5% and send the money to you. That is, 12,500 will be taken out as the taxes withhold at source, though there is no taxation, they withhold at source and send the money 237,500 to you up to. When they really file the taxes of that 5%, which can be taken into account and they get the refund. It is for the person who has been sending it, he has to, the money which has been deducted. The reason why the TDS and everything is there in India, the money which has been given as a gift to the relatives is not been taxed. If the money which has been given as a gift to the non-relatives, as I said, not brother, sister, father, mother, kids, or sons, daughters, the recipient has to pay the taxes. In other words, if you are a recipient from India, from your uncle, say, your father, brother, then you are subject to the taxation. So that's very the aspect which you need to remember. So again, investment in the overseas company owned by NRI. If you want to really get the money, an NRI person, a non-resident Indian, if he owns a company here, if your father, mother, uncle, or somebody, they can really put the money directly into the company, $250,000. Straight, I mean, you want to really buy a home or buy an investment property, you can really give the share to them and simply they can really send the money to your LLC, no questions asked. But the thing is, remember that they need to really have that income to be declared in India. They should have the source of the 250. Simply, they cannot really say that, okay, I will give $250,000 worth of cash to somebody there and let somebody deposit the money in this, your LLC here in USA. It's not that way. The money has to really come from India to here. And the third point is the Indian company can remit the money as equity also. This is another thing is relative or non-relative under the LRS, that is liberalized remittance scheme. They can send up to 250, but more than that also they can really send. But that depends on the company equation in the USA, how strong the company is. They can send up to the 4 times of the net worth of the company. Net worth is nothing but your equity. Okay, next slide, please. This also I get a lot of questions that concludes the India, the remittance. You have any questions on them, you can really email me and ask, in the chat later on, I try to reply them. Basically, the IRS, the audits, we all think that, the IRS is going to audit us. Typically the notices what you receive in a mail, stating that, okay, you're not reported this, that is not the audit. So what it says is, what the income which you reported under your 1040, what IRS has in the records, it is not matching. That's why they send you that notice. In an actual audit, you'll receive a, A by A4 letter, with 15, 20 pages. They would like to verify your bank account. They would like to verify your everything. One of the interesting aspects is somebody is depositing the money in your bank. You should have a receipt for that, why the money which is being given to you. Receipt, email, confirmation, something like that. Otherwise, what happens is, if you cannot able to provide the proper explanation of the money which has been deposited in your bank account under the company or the personal, they say it as income. So the source of the deposit is very important. Okay, next slide, please. As I said, the mail audit, the mail audit, in-person audit, that's what I said. Mail audit, they want to really review that what you reported, what they have. They don't have, it is not matching. They ask us to reconcile and submit again. But if the real audit, they would really see these all things. Your bank accounts, each entry, the income expenses, if you are putting down expenses under your, the business income or, LLC or this corporation, they would like to review everything. Next slide, please. These things which I get a lot of questions every time. Whenever there is a tax liability, the people ask me whether it is always the married filing joint is better or the individual filing better. As per my own experience, what I would really say is it's always like the married filing is joint is the better option, other than when you have a lot of itemized deductions, like your medical costs or anything. Otherwise, it's always best to file the married filing joint. If you're filing separate, what happens is some of the credits you will not really get it. If you pay the interest on the foreign home, that means you have the foreign asset in India, where the residential house, where your mother, father is living there, or brother, somebody, where you are on the loan and you are paying the loan. You can really say it as my second home. You can really get the interest deduction on that. Deduction for India travel. I said, I traveled to India. I incurred a lot of expenses. How can it be adjusted in taxes? In your regular taxes, it cannot be. But if you really show that if you are, the business related travel, you can really get, the deduction. And a lot of people ask me, okay, my parents are visiting the USA. What can be done? In a calendar year, if they live for more than 182 days, they qualify it as a residents, and then you have to really apply the TIN number for them. To apply the TIN number, then you need to really file as TIN, paper filing, and you have to really send the passports, or you engage somebody who can really authorize or notarize. A lot of people ask me, okay, the marriage expenses, I'm traveling, gold I purchase. So technically, all these personal expenses, which is no relationship of earning of the income, they cannot be deducted. That's what you need to really remember. Next slide, please. And also, these are large sources. I'm opening a company. Can I pay the rent? The answer is you can really pay the rent, but the rent, if it becomes the expense to the company, that becomes the income to you. But if you have the employees, the way you say that, okay, monthly once the employees come and talk to me in my home, and up to only 15 days, I can really rent it out. And I'm doing it for the business development purpose, and then it can be exempted. That means if you do not have the employees, the sole, you're the only person, that it cannot be done. Can I book the tickets for my parents? That also I told earlier. And the private school fee deduction, there is no place in the taxation. There is nothing can be deducted. Payments made to the company purpose from the personal credit card. The expense, the nature, if it can be related to the earning of the income, whether the expenses paid by you, paid by the company, paid by your spouse or anybody, that all can be deducted. But the important aspect is the relationship. Down payment for the residential home, nothing can be deducted, because that is investment of your individual home. The one of the suggestion what I'll give you is, if your spouse starts working, you need to really make the adjustments into your W-4 withholding, so that the proper taxes has been taken out. Otherwise, you will end up paying at the year end. The taxes, either it has been withheld earlier, I paid later, it's the same thing. But if you're not withholding properly, then you got to really pay a little bit of the interest on. Next slide, please. So that was quick. Okay, thank you. I think whatever the little information I had in a given the period of the time, I try to complete it. If you have any questions, I can really ready to take the questions. I have another 15-20 minutes. It's not a problem.
Yeah, it was very informative. For it was not a short one. It went for 50+ minutes. So there are few chats that had questions in it. So let me go through that. I'm going to. So question number 1 from Kavita Garu. A 22-year-old student was dependent during the spring semester 2022 and became individual by getting scholarship during fall. In this case, student can file taxes as independent or dependent.
A person who has been having the income on his own, he can always file the taxes on his own. The person doesn't have to be dependent on the parents' income. As is, the income is more than $4,600, the person will file the tax return. So, but again, if you're really paying for his tuition and everything, and you want to really claim the dependent, you can always claim. But the person can be filing the taxes independently on their own. They don't have to be in the parents' the taxes.
Prabhakar garu, just to extend the same in the same line, if the kid is only 15 or 16 and you have a LLC on your name and he's working part-time in the LLC, you can still pay that per kid, right? And then
you can.
What
You
up
need
to
to
what
document it if the person is going to be not the partner in the LLC, if the kid is working for the LLC. The one of the important aspect of it is if the husband and wife are the people only the members of the LLC, they are paying to the kids under that LLC. There is no social security and the Medicare taxation also. But you need to document that what he is really working for. It's not simply okay, I'll put him on the payroll and I'll pay $20,000 and there is nothing to be taxed. But you need to really understand that there has to be timesheet. What are the works you have been assigned? What is doing? You need to document. The IRS taxation system is nothing but the honor system. Honor system in the sense, the what you really file it. IRS believes that you are filing it, in a manner in which the tax laws allows it, right? So, but when they really ask about the documentation, if you cannot really provide it, then that becomes dishonor system. So you need to really think of it. When you're really incurring the expense, when you are taking any expense, you need to really see whether you can document it or not. If you cannot document, I strongly suggest don't do that.
Got it. Okay, thank you. So the next question is, I received my GC last year. My LIC policy is going to mature in next year, 2024. What are the steps for next year taxes?
LIC policy is maturing where? In India?
In India, yes.
Technically, you got the GC or H1B. The difference between the policy amounts paid and the policy you received, that is taxed in the USA, unfortunately. That has not been exempted. You take care of filing that, the receipt of the money or the cash value of the FBAR, at least in 2022 taxes, that, then when it really comes to the taxation, then let us see that what can be done. You can really contact me, then I'll suggest what needs to be done. But technically, the premium paid minus the amount received is your income in USA tax.
So Shiva garu, please contact him offline. Next question, and it was from Srinivas garu. Does having NRI account or having a local account matter in terms of income reporting?
No.
Do I need to report the income?
Yes. Nowadays, if you go to the banker, if the banker comes to know that you have a local account, then he will close it and convert that into the NRO account. It's as simple as that. So if you have a NRO account, NRE account, local account, it doesn't really mean anything. As per the IRS, you need to really report everything.
Got it. Superb. One more question from Shiva garu. FBAR limit 10K is you have it on your account, or is it a balance or amount of transferred in a year?
No, it
How
is.
Do you take that?
If you go back to your bank account, run the account for the 12 months period, you go back each and every day. Whenever the balance exceeds more than 10,000, you got to declare. It is not the cumulative balance. So that means every day, theoretically, every day you are transferring 9,000 and withdrawing 9,000 every day, then it need not be reported.
Excellent. That's a very clear answer. Thank you. Okay, one more question from Srinivas garu. Parents filing GC is in the process. Should they file taxes in US when they are already filing taxes in India?
If they are on
Parents
EAD,
are pension
living
holders
for more than 180 days, I suggest that they have to really file.
So when they are doing their processing of the GC, they can live longer here, right? I mean, the process when the GC is, yeah.
I suggest they file.
Okay. Anybody else have any other questions? I ran out of the questions on the chat.
That's good.
I mean, this is very, very informative, Prabhakar garu. There are multiple thank you messages coming in, but anybody has any questions?
Thank you, Srikanth. Before Srini Parsa speaks, Prabhakar Reddy garu, I have a question. The $250,000, the maximum amount, I think, is no matter what kind of immigration they are in, whether it is H1 or green card or citizen, is that applicable to everyone?
That's right.
Okay.
Prabhakar Garu, this is Srinivas Chenigarapu. Just one quick
Yeah.
question. I keep hearing that people are buying cars on their company account, right? So how does that apply in case of the year that you're buying, and how the depreciation is?
It's pretty simple. If the car weight is more than 6,000 lb, if you are buying in 2023, you can write off up to 80% of the car cost if you are using the car for the company purpose. Okay. And I get this lot of questions, assume a situation where the company has the activity as the income. And a lot of people, they come to me, say, okay, I'll open up a LLC, buy the car in the company name, can it be depreciated? IRS will not really allow that. If you are having an activity on the company and you are buying a car, and the car weight is more than 6,000 lb, and then they can be depreciated up to 80%. Remaining 20% that can go to the next year. But if car is in between, or less than 6,000 lb, assume, then you will get a depreciation of 14,400 per the year. That means you can write off the car over a period of 5-6 years, but it cannot be in the year in which you buy if the weight of the car is less than 6,000 lb. But one of the important aspect, I am stressing it out, the nexus between the car on the company name and using it with the company is very important. How the nexus can be established? Now, nexus can be established, you are having a consulting business or having the income. There are some sort of the income in the sense of, not $1,000, but a relatively a activity of the income which is being generated by that particular LLC or the S corporation. Then if you are buying it, makes sense. Otherwise, the answer is no.
Great. Thanks, Prabhakar.
So extension of the same question, Prabhakar, if you don't mind. If that LLC is having multiple activities like your own consulting company where you're consulting for IT consulting, in addition to that, you're doing some kind of other business like mortgage business or real estate agent, that will work, right?
That will work. But you are doing the multiple businesses under the LLC, buying the car under the name of the LLC, it's okay, because when you really file your taxes under the LLC, you don't demark the activity by, by the profession, consulting or anything. You will accumulate everything. So
right.
Under that scenario, it can be taken into account. It can be done.
Okay.
In other words, say the LLC which has 5-6 properties, you're using the car for the purpose of the LLC, that can be done. But what I'm saying is, only you're buying the car in the name of the LLC and just you want to get the depreciation, you cannot really get it.
You have to show some kind of activity in the LLC,
activity.
basically.
And the reason why it is been, again, I told you the honor system, right? IRS believes that what you say is right. But when they really ask, if there is no activity, and obviously say it is your personal car, nothing can be done. And, I tell you about one specific aspect of the taxation. The people file the taxes in India, the people file the taxes sending over the net, people estimate, the people come to somebody else, say that, okay, I'll give you $2,000 extra refund. But if something which is too good to be true in taxes, don't believe it. You will be accountable
right.
sooner or later. So,
right.
So if somebody says that they can really get a lot of stuff, don't do that. The reason is, the one they open up one tax return, then they'll go back to the last 2-3 years, and then you are always on the hook. So be careful. Of course, the playing here and there, that's okay. Where that can be substantiated, that's okay. But nothing is substantiated. Don't get the figures from the air and do that. That's what I always suggest.
Prabhakar, quick question అండి. సేమ్ అదే ఎక్స్టెన్షన్ వాళ్ళు అడిగిన క్వశ్చన్. సో ఇప్పుడు 120K ఉందనుకోండి ఇయర్లీ ఇన్కమ్, జస్ట్ ఎల్ఎల్సి కానీ ఎస్ కార్ప్ మీద కానీ, అప్పుడు రైట్ ఆఫ్ చేసుకోవచ్చా? జస్ట్ అది వర్కింగ్ ఫ్రమ్ హోమ్ జాబ్, సేమ్ ఐటీ జాబ్, వాట్ ఎవర్.
చేసుకో. మనం ఏంటంటే కంపెనీ కార్ కొన్నాము, దాంట్లో ఏంటంటే కొంచెం పర్సెంటేజ్ ఆఫ్ ద యూసేజ్ పర్సనల్ యూసేజ్ పెడతాము. బట్ దట్ క్యాన్ బి డన్. దట్స్ ఓకే. నేను ఏమంటున్నానంటే ఏదో ఏం యాక్టివిటీ లేకుండా ఏం చేయకండి అంటున్నా. ఒకప్పుడు మీరు ఆల్రెడీ ఒకటి స్టార్ట్అప్ స్టార్ట్ చేసారు అనుకోండి, స్టార్ట్అప్ స్టార్ట్ చేసిండ్రు, ఉన్నారు ఎంప్లాయీస్ అంటున్నారు, రెవెన్యూ జనరేషన్ లేదు, కారు కొనాలి కదా, అట్లా చేయొచ్చు. అంటే ఇయర్లకి వెళ్ళి తీసుకొచ్చి నేను ఇప్పుడు ఎల్ఎల్సి పాస్ చేసి ఇప్పుడే కొంటానని బయట ఆఫ్ చేయంటే కాదు అని చెప్తాను.
థ్యాంక్ యూ అండి.
అయిపోయిందా?
Thank you so much, Andy.
Shrikant, the Srini Parsa is going to be.
Yeah, well, thank you, Prabhakar Garu. That was
Sure.
really very, very informative. The point, the topic taxation antene koncham it is definitely a complex topic, right? Which gets into a lot of clauses and everything. You touched upon everything, right? From vehicle, and the recent trend is about buying the cars, right? So akkadi nunchi US taxation gaani ledante overseas taxation, right? And then FBAR, and then the repatriation as well. So it was really very informative, very, very useful information. Thank you so much for sharing this and also your time. At the same time, to all the audience here, thank you again for showing interest in this and coming here, and then for all your questions. Thank you so much for that. In Janardhan annattu, Miru, if you are not a member yet, we would strongly encourage you to please register and become a member of GATES. We have a lot of activities, like first of all, as you've seen this week and last week and all the weeks coming forward, going forward, we do have a lot of awareness programs, Andy. So it will be a real good chance for you all to really get this information, right? Be aware about whatever could be the topic, right? And also, away kakunda, there are so many other aspects as well, where you will be you'll have a chance to take part. For example, the talent show that's coming up. So please register and then be a member of GATES. So
and sorry Andy, a couple of people number adiginattu unnaru. Na telephone number, if you are there, and I did not really put my contact sheet, I believe it's a 404-513-9595. అండ్ నా ఈమెయిల్ వచ్చేసి 404-513-9595. మీరు ఆ చాట్లో ఉన్న వాళ్ళకు పెడితే మెసేజ్ పెట్టండి. నా ఈమెయిల్ వచ్చేసి cpa@reddicpa.com. కాకపోతే మీరు reddicpa.com గూగుల్ చేసినా వస్తుంది వెబ్సైట్, దాంట్లో ఫ్రంట్ ఆఫీస్ నెంబర్ ఉంటుంది. ఓకే
ఓకే, సో ఇక్కడికి వచ్చిందండి. యా, సో అక్కడ రెడ్డి గారి కాంటాక్ట్ నెంబరు, ఈమెయిల్ ఐడి అన్నీ ఉన్నాయి. సో ఇన్ కేస్ ఇఫ్ యూ హ్యావ్ ఎనీ క్వశ్చన్స్, యూ కెన్ ఆల్వేస్ రీచ్ అవుట్ టు రెడ్డి గారు. And ledanna, even if you can reach out to GATES, we will certainly forward to him. Okay.
Thank you, Srini. Prabhakar Reddy garu, from the bottom of our heart, thank you so much. You are the backbone for the GATES, and you are always there for us for any type of services, and also a lot of information, especially NRI taxation. A lot of people are not aware, and especially S corps or any LLCs, and you clearly, concisely explain to us. And thank you for educating us. Thank you, Shrikant, for conducting as a moderator, Raghuveer, and all the board members and all the members who joined for this session, and keep supporting GATES. Thank you, Srini.
Thank you.
Thanks a lot. Have a good weekend.
Sure.
Thank you, sir.
Thank you.
Thank you.